1, 2, 3, 4. Enbridge. ENB. I'm looking at it on the Toronto Stock Exchange. That was for a viewer. Say, Pat, check out ENB. And I've been following it for a while. And here is, before we start doing Stan Weinstein on the weekly, that's stage analysis stuff. We're going to do my chart trading framework on the monthly candle chart just to see what's the trend, guys. And this, when you're above the 12-month moving average, is beautiful. When you break it, you want to get out because you don't know, either stage 4, sideways move. It's just not healthy when you've broken it. And after that, when you're above, it's good, but not when the 12-month moving average is declining. So this kind of being a stage 4, then went back up, stage 2, stage 3, stage 4. And this could look like maybe, just maybe, a stage 1 on the weekly. But on the monthly, there's a whole bunch of things that are happening here. Because I see these patterns. Let's do it here. This is the support that just resisted resisted the breakdown right here. But before that, I could have told you that I had another breakdown line here. And what happened? Broke down, had an implied measure move from top to bottom, added to breakout line. But the price action pulled back and broke up through it. So I'm starting to see that means it wasn't the most meaningful breakdown line. So that target from that pattern would have been less likely than if we would have broken out of important support. But the thing is, you don't know until it happens, right? Even this one, pullback, price action went through and to close above that formation here from top to bottom. Not the most meaningful one. So what is that telling me? Maybe this pattern here. Then go back all the way up here. And I'd be curious if I would overlay some Fibonacci lines. I'd probably get this type of a move back. Here you go. So that right now, that support, which is now resistance, hasn't been tested. The target of that pattern, its measured move has been reached already. And the bigger patterns, well, they've been invalidated because we've had price action go back in within them. Might be the beginning of a turnaround here. You should not be shorting it if the 12-month moving average has been closed to the up. But I don't know how much time we're going to need to bounce around these levels here before it continues to decide, are we going back up? Or are we going to continue the downtrend? Where am I? Fibonacci retracement. So let's just say top to bottom here. See this pullback, this top pattern coincides with this level here. I did it upside down. That 23%, if I inverse pullback. And the other breakout line, breakdown line, is closer to the 38% pullback. So not quite. But there is some symmetry, some distance in between each of these pullbacks. Interesting. That's why I always try to observe. I never judge another framework. I've noticed sometimes patterns of using swing rules. They're the same as some Fibonacci extension targets. Kind of the resistance and the support and all those lines kind of match. The price action, honestly, people have derived a whole bunch of stuff or applied stuff to it. And the reason there's resemblance between all these indicators and all these techniques is because they're all based on one thing. And that's the price action, guys. Everything comes from there. If price action decides to go down, that's the high, that's the low. That's a price action to define all of this. So a lot of similitudes. All right, that's enough for that. The monthly, we know where we're at. We shouldn't be shorting because we have a close above, but we could be moving sideways or up. That's when we zoom in. If you want details, more precision for your entry, you want to see how those monthly candles are shaping, well, if you zoom in, you'll get to see the stage within the stage. Here's that bottom pattern I kind of circled those few months, severely outperforming the SPX. So that's really a stage 2 at a stand. But look, we're out. So now we're getting close to the zero line. We're still gray because the 30-week moving average is not going upwards. We're not above the zero line. And if that happens, then this is going to turn green. And we're going to have our signal that we have a stage 2 continuation, guys. Remember, sometimes some of my podcasts talk about embryonic breakouts. It's not the first breakout. You can't be there. You still have the momentum, the trend going downwards. But these first breakouts, let's see if, yeah, look at that. Hold on, let me remove all the noise, remove all trunk tools. Here's that. Oh. Here's the embryonic arrow. Arrow. Oh. Oh. There you go. Wait. What's happening, Pat? Yeah. Not pressing the good button. Okay, there you go. The volume, twice the average of price 4 weeks. And Mansfield's going up, but you're not above the Mansfield. Above the zero line. You don't have a 30-week moving average that's starting to angle upwards. So I call that the embryonic. It's a good base of a stage 1. Now we're going to have the next one right here. Sideways move, burst, sideways move, burst, sideways move. That's how it happens. Sideways move, including pullbacks. So let's identify. We're right here, man. So what's next? For this to continue, we need to break above this horizontal breakout line. We need same type of week we had right here. Twice average of the previous 4 weeks. I want to have a close above, get out of the Ichimoku cloud. So maybe a few more weeks to go through that, and a close above the Ichimoku cloud would be awesome. And I want us to be outperforming the SPX. But by that time, I think if we get up close here, the Mansfield is going to look a little different. I think we'll be crossing over, and we'll have the momentum of crossing over the overline, stand like that. And we'll give it time for the 30-week average to go up. So this is my imagination. It looks like a playbook from a football game. And if we have the volume here and the Mansfield going up, we'll be golden, guys. But sometimes I always say the second and third breakout are the best ones to join in. Stan always says there's 40 to 50% move before you enter off the breakout. That's going to really signify your stage 2 breakout. So you got to wait for all those clues, guys. So very embryonic. The zoom in's telling us that could be something turning around if you have a stage 2 there. And if you go back on the monthly, then this has to shape differently. So we have to go back, stay within that range, within these breakdown lines that could have been valid patterns giving us targets. But since we're closing above and within them, we're breaking those, and the chart's just morphing to something else. Okay, guys, that's it. ENB, man. I'll keep an eye on you. Ciao.